Good morning, guys. Welcome to this Friday, January 16th. Thank God it's Friday. It is definitely needed. I First couple of weeks of January, and we are pretty much still holding on to the gains, still holding on to the upper levels, trying to push it higher, but not quite making it. It's still kind of just grinding up here. But we are in new territory. We stretch it up a little bit up in the 7,000s, and we just kind of churning up here right now. That's kind of where we're at. The news for this morning, and nothing at 8:30. We get industrial production at 9:15. Housing market index at 10, and that's it. So a couple of speakers after that. So not the whole. I don't think that's going to really drive anything in a big way. So we'll see how the whole mood of the market is going to be this morning. So far, the overnight. I mean, we had a little rundown here the other day, and then yesterday's overnight took us right back up again. That's the session. That's the day session from yesterday was up here flirting with the 7,015s, and they're still holding above right at 7,000 really. So 7,000 right here, 69.90s. We're trading right in that range right now. So I would just start off the same as yesterday, range bound, looking to sell strength, looking to buy weakness until I see them really trying to either try to knock out the highs or we're going to see some profit taken and we're going to start trying to knock down the lows. So that's kind of where we are. So I mean, capital flow is pointed higher, so I would favor the long side of the market. Looking to buy weakness would be my preference. That's how to adjust what the market is actually doing. So I would initially look to buy weakness against the 68, so 69.85s. Well, 69.90 is where we're trading right now, so I'm not going to quite include that, but that is a buying opportunity, pretty aggressive. 69.85, 69.75, the 65s down to the 55s and the 50s here. They start taking out that 50 again, that's our midpoint, 69.50, and that comes out, I would start thinking about the short side and still looking to buy weakness all the way down here to that 68.90s and start taking out those four little edges. Well, then we are the things to start to come apart at that point. So that's pretty much it. I mean, we are trading in that range, and if you're trading in the range, you're looking to fade the edges up to the upper levels. You're looking to you're looking to sell edges up to the upper level, you need to buy down to the lower level. So on the way up, we're looking for short setups against the 7,000 or 7,005s, 7,015s, 25s, and the 35s for rotations back and down again. Now we're right up here against this upper area. So I mean, I would just look at all these edges as one big chunk here and just look to fade them if it starts trading higher for rotations back down. And if we get one of those things where one of those days now we're gonna either start taking out the highs and really make it go out of it, well, I'm just gonna stay on the long side. So the key thing here is like when you start, if you're looking for short setups, let's take just look for a retest failure type of a trade. If you're going to be aggressive and step in front of the edge, you can do that when the range is like this. But if they get really volatile and they really start running it, then those edges are not going to be very well defined, and you're going to just find yourself getting shaken out of trades or get stuck in a bad trade. So I would look for short setups against the 7,005s, 15s, 25s, and 35s. Looking for a decent retest failure on those. Trying not to be super aggressive. I have a problem with that. I know it's not easy. But sometimes you just have to, I prefer to get good trade location, but you just have to kind of factor in what kind of day you're trading in. If it's a slow churning day, then then you can be more aggressive. If it's moving pretty hard, you want to hold off a little bit to see where the edge is really at before you do it. But then run those edges pretty good. And on the way down, as I said, looking to buy against the 85s. So that would be the 69, 85s, 75s, 65s, 55s, down to the 50s here for rotations up again. Below 50s, I'm taking out any long bias and any favorability for the long side and looking for weakness at that point. And looking to potential short setups, still looking to buy against those lower levels. The market is heading lower like that. you do want to try to get on the short side of it if it goes that far down. So if they take out these session lows here at the things are moving on me. The 55 and the 50s, the two support areas, the session lows. I would start trying to look for a short trade and see how far they can take it, but still looking to buy against these support areas, the 35s, 25s, and then you have the 6910s, 6900, and 6890s down here to pay attention to. So looking to buy against those, just not super aggressively if they're heading lower. And if we get a day when I get all the way down there, I mean, you should have been trying the short trades already after the 68, 6950s. And that's when you take off any illusion that the long side is going to be able to make it go out of it. And then the bears are taking charge and are really starting to move this lower. And that is, as you said, the importance of that 6950 is really that you have a high volume area there, that's your balance point in this distribution. So if you start taking that out, you're going to be heading back down to that other edge of the distribution, which is going to be down here at the 6890s. So there you go. That is the ES to get started. Range bound trading is pretty straightforward. There's not much driving it right now. I'm just waiting for, I mean, we're still in earnings, and that's going to be the big thing here. Earnings reports coming out. That's going to be I think the key driver here in this the next couple of weeks. They get so far bank earnings has been good. The market has been liking it, but it's you get some of the tech earnings come out a little bit dicey, but then it could go. It could get pretty volatile at that point. You just have to wait and see. So a few weeks of earnings reports coming out. So that's going to be probably what's driving the market in the short term. On the Nasdaq, also same story that we have pretty much taken out this chunky edge, creating a distribution right here, like moving this a little bit higher and setting it up for another leg higher is kind of what I'm thinking. Doesn't necessarily need to be that way, but that's kind of what the structure is hinting at. So I would look to buy weakness still, watching that ledge at the 670 down to the 600, this area, that comes out. I would start thinking short out of the market again. Start looking for rotation back to that lower range at the 390 to 400. The Nasdaq can move across this whole range easily in a day. So that's a lot can happen on that front. I would look to buy against the 790s. 730s, 680s, 630s down to the 600 or 560s here. If these two areas, the 630 and the 560 comes out, that means that we're taking out that midpoint, and I would start leaning in on the short side a lot more aggressively at that point. Still looking to buy weakness all the way down here. So I mean, it's all the way down to that 400 level, 430 and the 400s, down right to that lower edge. They're looking to buy weakness against those levels, just not as aggressively at that point. So that's where we are. So, and on the way up, if they start trading higher, I'm going to be looking for short setups against that 860s, the 940s, the 990s, up to the 26,040s, rotations down. And if they start taking out that late reader, that 2980s, I would probably lean in on the long side at that point. This is still an opportunity for short against that above the 26,000s, but you start taking out that area, the 990, you definitely have some strength going on at that point. So, but looking for short setups against these levels up to that 26,040 level for rotations down, and then that's how we get started. So both ES and Nasdaq started off flat out range bound. Capital flow is still staying on the long side. The exchange member chart is pretty range bound until we see them take a direction here. Bond market is on the move this morning. So a little bit more than you kind of want to see. So you're looking at the bond market here, taking a leg lower. So they started off already overnight a little bit, and now you can see here they're heading lower in the going into the day session. So they stalled here for a bit at the 1525. Was almost setting up a trade, and then they started taking a couple of ticks lower after that. So we'll see if that turns into a little bit further weakness here. But it's still range bound. I mean, it's looking at a bigger picture. They're still just going back and forth between the edges. They got not quite up to the 117s. They got a little bit higher. They're trading in this distribution right now. You see how this thing getting smaller and smaller, but they're trading right in that distribution right now. So a big bell-shaped distribution on the bonds coming to balance in the long term and staying in the short term. I would look to buy weakness against the 25s have already been taken out. So next one is going to be the 20s, 14s, and the 1506s. Looking for short setups against the 1604s, the 169s, 15s, 15, 16 here for rotations back down again. So 3 levels up, 3 levels down, pretty much the range. So far, it looks like we've got a little bit of weakness going on. The retraced little pop we had here the other day, we're right back in that lower range again. But it's not much of a range. They're just kind of drifting back and forth here. So I would just stay range bound. As you can see, each trading day is like a half a point, usually less than a point of range. So you got to be patient trading it. I was looking at this right there. You see these 3 bars right there? They looked like you were holding it, and that 4th bar knocked it down. You see that? So that's the danger. 3 bars in a slow market like that, you kind of have to not be too aggressive on it, because you get these kind of setups and it kind of be deceiving. But this one was at support. So you were down here at the 1525s. You had 3 bars where you couldn't extend to the downside, and the 4th bar is when they actually kicked in. So and you have the day session with the bond day session kicking in. So I wasn't going to take that anyway. I was going to wait for the day session to begin before I start doing anything on it. But before you get some activity there, the 3-4 bars are not going anywhere is pretty common. So once you start getting into the day session and it happens, then you have a little bit more activity. So they're still looking like that. It looks like they're trying to take it lower. So stay on the short side right now to get started, at least on the bonds. Looking to sell strength, at least to get started. But overall, we are pretty range bound. So that's pretty much it, guys. Back to the ES and the NASDAQ. And so far, they're just kind of where we left them. So let's see what kind of day we're going to get. Yeah. Alrighty, guys. I'll wrap it there. I'm going to say good trading, and I will see you back at 1:30 or 11:30 for the next update. And it's Friday. Thank God it's Friday. Alrighty, guys. Later.